Last week, the president demanded they drop rates immediately during his speech out in Davos. Let's check in with our mock Fed, see how they feel about that. 6 of our 7 panelists voted for no change this time. Don Peebles once again wants that 50 basis point cut. All roads point back to Chair Powell as investors gear up for what he'll say at the press conference tomorrow. For more on all of this, let's bring in one of our mock Fed panelists. I think we said he was the chair this time. I don't know where that comes from, Zervos, but I'm fine with it. If you'd like to accept the honor, welcome.
Might be the nice chair I'm sitting in here, Kelly.
Yeah,
I don't know what that means.
Yeah, it's cathedral.
He is the chair man.
That's right. You're the chairman. That's what you are. You voted for no change. Why?
So I think the market's set up for it. I think they've got no reason to sort of get aggressive right here. They've prepped the market for it. Why would you change it at this point? I am sympathetic to Don's idea that we have, I think, a much lower neutral rate than many in the market or on the committee think is out there, that we're kind of going back to neutral rates at 2019 levels. We've articulated that in a lot of our research related to the balance sheet. But, you know, it's early days. We can wait. Let's get a few more CPI, PCE data prints that feel good, or a little bit of weakness on the payroll side. And I think we can resume again and get moving lower. Which is where I believe we're headed this year. And I think that'll be quite supportive for risk assets.
Get moving lower. That's where we're headed this year. That would be good for, not many people are feeling very confident on that branch right now. Why do you think that is still the way things are going to evolve?
I think the argument that we made 2 years ago, Kelly, that policy wasn't that restrictive because the balance sheet was so large, and that was pressuring stimulus into the system, residual stimulus into the system from all that QE, that's gone. The balance sheet's now at $6.8 trillion. It's getting close to 20% of GDP where it was before COVID. So all that storyline that kept us in the higher for longer camp when everybody else was pushing for massive cuts is reversed. And so we're on the other side of the market. And you know what? I liked being on the other side of the market 2 years ago, and I like being on the other side of the market today. It always feels good to be out of the consensus.
What about tariffs?
I'm just not so worried about them. I'm not worried about the tariffs. I'm not worried about the immigration. I think what the president did with Colombia was an amazing geopolitical strategy, and that's more of what we're going to see with tariffs. Although he does seem to like the idea of raising revenue and more revenue with tariffs. He keeps talking about McKinley, and he had a pretty powerful speech down here in Florida last night, really pushing that almost zero income tax idea. I don't know if we'll go there, but again, I just think the market's overplayed the tariffs hand. The market's overplayed the immigration and the fiscal profligacy risks. And they've underplayed actually what the president said last night, which is deregulation. That's the big story. Kelly, it's the first time I heard him say this, but he said he's polled CEOs consistently about would they rather have tax cuts or would they rather have deregulation? And he says over the years and over all of his discussions in the past administration and then currently in the lead up to this election and the win, they've all told him one thing: less regulation is always preferable to lower tax rates if you had to make the choice. And I think that's the biggest story. And it's just a huge positive for business sentiment.